And so we have a cycle, and the real estate cycle works like this. I'm going to go around the cycle once, and then we'll relate it to a few things. But when we start to... Is this thing on? No. Can't use it anyhow. Let's just work with the cycle as it is. This is, what page is this in your book?
35.
Page 35. Let's start with buy low. That's where we are right now in the cycle. When we start to talk about buy low in the marketplace, is this where we would like to be buying the real estate that we're going to be dealing with?
Yes.
As much as possible, sure. It's the best time to buy if you can, because prices are depressed. Now, when we say prices are depressed, what prices are depressed? More residential than anything, isn't that true? People come, a lot of people said to me, Stu, where are the best deals? Would you like me to tell you where the best deals are right now? Condo conversions. If you want to buy a project of 30, 50, or 200 units, there's some great deals in condo conversions. Isn't that true? Here's why there's great deals in condo conversions. Nobody wants them. They burned themselves out in the marketplace. They really did. Okay. I didn't say that there were deals that you wanted. I said they are great deals. In that the price today relative to the price, you can buy them 20, 30 cents on the dollar, maybe even less. But here's the problem. What are you going to do with them when you have them? And see, with condo conversions, most of them are empty. Okay, so in the residential market, there's some great stuff out there, but that's not really a great place. People said to me, why aren't we talking about the apartments in the residential marketplace in commercial? And one of the biggest reasons is because, first of all, everybody wants apartments. When people make the transition from single family into commercial, the first thing most people think about is what? Apartment buildings. And so there is a law of supply and demand impact here. The more people who want that apartment building right there, the higher the price is going to go, because people are willing to take a lower return today. Does that make sense? One of the greatest examples, I mean, in the residential arena, I played around with apartments for a period of time. And when I played around with apartments, there was a company out there, I won't use it, well, it was big apartment company. And they own a lot of apartments. They really know the business. And when they were dealing in apartments, they would buy apartment buildings at a 4 or 5 cap. That's a 4 or 5% return on their money. And particularly at times when interest rates are 6 and 7%, why would anybody buy at 4 and 5? I mean, if you borrow the money, you're only losing 2%. But see, here's the thing. They weren't borrowing the money. They would get the money from places like pension funds, insurance companies, but at very low interest rates, and those funds would be their partners. Well, the reason why they would do this, see, they're at a 4 cap today, but what happens at the end of the year in the apartment industry? Rents go up, right? So they are at a 4 cap when they buy it now, but a year down the road, what are they at? Maybe a 5.5, right? And then a year after that, they're at a 7. And a year after that, 3 years down the road, they're at an 8.5. And 4 years down the road, they're at 9 or 9.5. And 5 years down the road, they're at 11. Now does it look way better? But see, these companies are in it for the long haul. They're not short-term players. And they have big money. They have cash to deal with. So here's the point. Can you compete with these guys? No. So that's why we don't spend much time messing with this marketplace, because it's just big players, and they'll hurt you if you try and get into that arena. In the small apartment building process,